Hello everyone, my name is Sabila Rahmadani. I'm from AK21C. In here, I want to present my scientific papers about the effect on investment, on financial management, and company value. Investment terms you should know: common stock, real estate, bonds, stockbroker, asset association, mutual funds, and hedge fund. Do you know investment? Investment is an asset acquired or invested into the bull world and save money from the hard-earned income or appreciation. Investment is related to financial management in a company. Basically, the purpose of financial management is to maximize the value of company. However, behind this goal, there is a conflict between shareholders and manager and with providers of fund as creditors. Shareholders will tend to maximize the value of shares and force management to act in their interest through their supervision. Creditors, on the other hand, tend to try to protect the fund they have invested in the company with guarantees and strict supervisory policies. A manager who is able to make the right financial decision is needed to achieve the goal of increasing the value of the company. One of the financial decisions that must be taken by a manager is an investment decision. Signaling theory explains that investment spending gives a positive signal about the growth of company value in the future, hereby increasing stock prices as an indicator of company value. Fama and French, 1998, and Wijaya and Wibawa, 2010. Argue that optimization of firm value can be achieved through the implementation of the financial management function, where one financial decision taken will affect other financial decisions and have an impact on firm value. Financial management involves the completion of important decisions taken by the company, including investment decisions. Investment decisions are one of the functions of financial management that involve allocating funds, both internally and externally, in various forms of investment decisions with the aim of obtaining greater profits than the cost of funds in the future. Forms of investment include short-term investment consisting of investment into cash, short-term securities, receivables, and inventories, and long-term investment, the form of land, buildings, vehicles, machinery, production equipment, and other fixed assets. Different types of investment: fixed deposit, bonds, gold, stocks, mutual funds, public provident funds, exchange-traded funds, national pension scheme, and real estate. Shareholder prosperity can be an indicator to determine the value of the company. High company value will indicate high shareholder prosperity. Maximizing shareholder wealth is reflected in financial decisions and manifest through financial or funding and investment decisions made by the company is considered important because it relates to survival and development opportunities for the company. With the funding decision made by the company to use debt in financial investment, it is expected to increase the value of the company so that it can provide prosperity for its shareholders, because the use of debt has two important advantages. First, the interest paid can be tax deductible, which in turn lowers the effective cost of debit. Second, creditors will get a fixed amount of return, so shareholders don't have to share the profits if the business is doing very well. The hypothesis based on the introduction is that investment decisions have a positive effect on firm value. Research methods and materials. Research 1. Population. The population used in this study is all manufacturing companies that have been listed on the IDX. The total population in this study were 135 companies. Second is sample. The research sample was determined by non-probability sampling method with purpose sampling technique with the following considerations. A. List as a manufacturing company on the IDX. B. Companies that continuously report their financial statement from 2010 to 2014. C. Manufacturing companies whose net profit after tax did not suffer losses during 2010 to 2014. D. Companies that submit financial statement in the rupiah exchange rate. E. Companies that are leased and not delisted during the observation period. F. Companies that can be sampled are 59 companies. Third is types of data and data sources. 1. The type of data used documentary data, namely research data in the form of report owned by companies listed on the IDX in 2010 to 2014. 2. Sources of data. Sources of data used in this study is secondary data. Sources of data were obtained from the official website of the Indonesian Stock Exchange or www.idx.co.id or the company's official website. 4. Research variable. Research variable have two variables, dependent variable and independent variable. Dependent variable in this research is the value of the company. Firm value is measured by price to book value or PBV. This ratio measures the value given by the financial market to the management and organization of the company as a company that continues to grow. Brigham, 1999 in Wahyudi and Pawestri, 2006. Independent variable. Investment decision. Investment decision is this study is proxied by PER or price earning ratio, where price earning ratio shows the comparison between closing price and earnings per share. Brigham, 1999, Wahyudi and Pawestri, 2006. Research test. 1. Performing heterogeneity test. From the heterogeneity test, it can be seen that the result of the variable calculation show that the SIG level more than 0.05, namely the investment decision SIG value of 0.230. So it can be concluded that this research is free from heterogeneity symptoms and deserves to be researched. Second, conducting hypothesis testing. Hypothesis in this study is the effect of significant positive investment decision on firm value. Based on the result of the study, it can be seen that the investment decision has a positive coefficient value of 0.001 and probability value of 0.216 more than 0.09. This means that investment decisions have no effect on firm value in manufacturing companies listed on the Indonesian Stock Exchange from the 2010 to 2014 period. This is not in accordance with the hypothesis. Then the hypothesis is rejected. Research result. Based on the test results, the investment decision variable has no significant effect on firm value. This shows that any amount on investment that will be borne in the future by the company will not affect the value of the company. Companies are not always able to implement all investment opportunities in the future. It can be interpreted that investors prefer financing through debt and dividend to increase the value of the company compared to investing in investment opportunities because investment will affect and support the level of profit in the future. The expected future return of investment can be estimated with certainty. Taking the company's investment that is not good will have an impact on decreasing the company's performance so that it will be responded negatively by investors and will eventually lower the stock price. This means that taking investment will not be a consideration for investors in assessing a company. So, based on the hypothesis and research conducted, it is known that investment decisions have no effect on firm value in manufacturing companies listed on the Indonesian Stock Exchange. Thank you for your attention. See you and goodbye.